Hello and welcome again on Stocks Advisors channel. Today we will talk about Standard & Poor's 500 SPI traded at New York Stock Exchange. Well, first of all, what is important to note here that we finished today with minus 2.4%, which is quite big actually for allocation of funds with market capitalization of 316 billions, but after hours we're trading just around zero, which is within the volatility range. Of course, next question is how to trade further, what's going on, are we going for a major correction, and how to enter if we want to play with a Standard & Poor's 500. So first of all, what is very interesting here, it's overall growing, and of course if you are mid or long-term trader, whenever you have a ticker with actually SMA allocation being 20, 50, 200, this means that moving averages are aligned like this. You are safe to stay within if you are mid and long term, especially if you are a long-term trader. But once this is going to break, you need to reconsider, either re-enter, exit and re-enter, or reconsider your portfolio. And in this need for reconsideration was there in, let's say, from September to November, when the pattern of 20, 50, 200 was broken. By the way, we have here three moving averages depicted as always being moving average 20, 50, and 200, green, blue, and red line correspondingly. So here we saw the mix of moving averages 20 and 50, and then again they aligned well, and we saw the price was going up. So now what's happening? What is happening is very classical from a technical point of view situation. It's already an indication for a correction, and it already started previously by end of January, because always when you have this so-called 20, 50, 200 stock growing, until it uses SMA 20 as a support line, you see all these times when moving average 20 was enough to rebounce, you are stably growing. Once you have an instance when you pierce further and then you need to use moving average 50 as a support, it means that something is happening, so the price could pierce further, so you need to be prepared. Maybe soon after the next wave it will start declining, and indeed this is the case. Also the same it was happening here. You see, we had in July, August, we had moving average 20 working as support lines, and then it pierced, and then volatility piercing further, so you know something is going to happen. Here's similar situation. Moving average 50 worked the support line first time by beginning of February, then recovery, we returned to overall trend, and now we have again pierced it, attempt to recovery, and then cancellation. And this is very strong moment, because it tells us with this cancellation it should go lower. So it's a kind of a very strong indication for a correction taking place, and this means that you need to be prepared for further decline, because it's already one and two and actually third time trying to pierce below the moving average 50, and it might be happening because there is already clear neglect of the growth upwards, and we see this formation of the ceiling. So looks like there is a at least temporarily downwards let's say trend is forming, let's call it R1, and once this is actually further confirmed, if it's confirmed tomorrow, if we pierce moving average 200 downward, 50, downwards, then we know enough, we know that there is a correction starting. So if this is happening, what to do, how to play? Of course, there won't be any major catastrophic behavior for S&P 500. It's just impossible, but corrections could take place, and they open for us as well very interesting buy opportunities. So we just need to look for nearest, let's say, support levels according to our mixed analysis. And what does it mean? It means that the nearest support level actually is in this vicinity, so this channel would be very nice channel to wait for to enter. It will be already itself very strong enough, so it would be very nice to wait to enter. Why that low from the moment? Because also what was happening with time, if you look from August, the distance between moving average 200 and moving averages 2050 that were going in the vicinity of each other was increasing. It was creating this void between SMA 50 and 200 where the price could be sucked in, and this looks like indeed taking place now. So whenever we are in the channel S1, S2, it's immediate buy, And when I say buy within the channel, it doesn't mean that you immediately buy with all funds you would like to play within the channel at the first instance. No, you can also sub-split them and then start slowly entering within the channel. So don't do it immediately. It's because if we go a little bit lower, you still take less profit than you could when the rebound takes place. So do it slowly. Once this is happening, it's a first immediate entry, and of course, if it rebounds, at least the first price target to go to would be R1 level, so it would go like this, being very nice profitable behavior here, and up to, let's say, maybe 7-6% you can make. Usually we advise taking 10-15% for trading within our channel, but here, because of overall, let's say, a slower move and many days needed to trade, I would say it would be from 7 to 10%, because this is kind of a very slow but growing, of course, position. So that would be a little bit lower than usual target. So whenever you have 7 to 10%, just take the profit and then either re-enter or consider other videos, other stocks. Our channel will post daily mini videos. So this would be the first enter. And should be really some stronger correction taking place, should be really something with the global market, maybe going to the previous consolidation green box. This one, let's just write it box 1, B1. So if the price wants to go there, well, we can be again prepared. There is another very nice level to enter, actually being here, very clear lines. And by that time, moving average 200 will be also in the vicinity of it. So it will be very strong double support and should be actually the final from technical point of view level to enter and average down. Let's call it S3, S4. So if you enter there, it should be from technical point of view good enough average down. So let's write the levels here for those who more like a numerical representation. It will be 362 to 370, the first level, and then here it would be between 346 to 354. So this would be the second level to enter, to average down. And then it should be actually end for correction, if correction is purely technical. But again, we know that we can also have some global negative situation, kind of a catalyst, although now after COVID times when everything is accelerating, it's very hard to imagine this. But again, as always, at our videos, we do so-called doomsday approach, doomsday analysis, where we allow this in our thoughts to happen in order to be prepared. And this is within the strategy of our mixed analysis, which means that we place our analysis based on 3 pillars. It's a technical analysis, it's a non-linear averaging down, and it is taking into account and mitigating risks of possible negative outcomes. If it's for company or if it's for ETFs, it's like the global things. So we need to take it into account, and that's why usually we do the third, let's say, a level of average down. This is really for, let's say, reserved for global or company-based or ETF-based or global something to happen which cannot be anticipated. Should this be happening, then 325 to 331 would be the last averaging down opportunity here. So that's how to trade with S&P 500. Again, this is the numerical representation. If you're more for graphical one, you can look here. You can just make a print screen of this one and use it as a trading card. And speaking of non-linear averaging down strategy, it's still very positive. So it's 1-2 approach. What does it mean? It means that the funds you would like to play here, you can split in 5, and then you can buy already with one portion within the first circle. Although it's not immediate buy, you might need to wait 1-2 days. Then you can buy again with 2 portions in the second circle, and again, if some global negative things starts to come, you need to go for stronger averaging down, and then you can buy in the last circle again with 2 portions. And whenever you have the rebounds, the profit taking, the target is a little bit lower because this is overall a slowly moving chart. So it's from 7 to 10%. Whenever you have it, take it and then either re-enter or check other videos. So that's all for Standard & Poor's 500. Good luck with it. Please also don't forget to subscribe to our channel if you are first time watching this video. This way you will not miss out new videos and new interesting discussions for US-based stocks.